Welcome to Stock Talk with Nico Criticos. Today, we're going to be going over the new IPO of Portillos stock, and we're going to go through the 10K as well as this little table that I made comparing it to other restaurants. And then we're going to use Nico's stock market checklist at the end to figure out, is this a good time to invest and what my price target is for this company. So Portillos stock, ticker PTLO. If you don't know, this is like a fast casual dining restaurant, and the company, they mostly sell roast beef sandwiches, but they also have hot dogs, cheeseburgers, shakes, fries, all that stuff. So it went IPO last week at $20 a share, and now this company is trading at, it went as high as $43 a share, but now it's trading at $39 a share. And so this puts the company at a $2.6 billion valuation. Right now, they have 67 stores, mainly operating in the Chicagoland, in the Midwest. And in their 10K, they said they aim to grow the amount of stores or the amount of locations 10% a year until one day they want to have 600 locations. That's their long-term goal. 600 locations, and they said in about 20 years, they think they're going to have that. They also said in their history of 58 years, they have never closed a restaurant, which that's good news. Then they discussed that their restaurants generated a higher AUV and restaurant level adjusted EBITDA margin than any other fast casual restaurant, consisting of $7.7 million per restaurant and 27% margins in 2020. Each Portillos location on average served approximately 800,000 guests in 2020 and approximately 825,000 guests in the trailing 12 months and ending June of 2021. And then they said their average per guest spend is $9.60 for each order. And when you compare, they bring up Chipotle in their 10K. And when you compare Chipotle and Portillos, they have a lot of things in common. For one, they have very similar order spends. Customers normally spend about the same amount, that $10 mark. And then they also have roughly the same amount of customers come in on a given day. It's normally right around that 800,000 guests per year. Okay. And so net income for 2021 for Portillos will be roughly about $28 million. Okay. This is an important number. And 2019 revenue was $479 million. 2020 revenue was $455 million. So it dipped a little bit. And then revenue for this year is expected to be about a little over $500 million. So those are two important numbers for net income and revenue. Now we're going to get into this chart. And as you see here, we have market cap, revenue growth expected for next year, profit margins, number of locations, the forward PE ratio, the price to sales ratio, and the average revenue per store. The average revenue per store is kind of a rough estimate. Some of them are exact, but some of them are a little bit rough. It was hard to calculate it exactly. Same thing with number of locations, because that fluctuates a lot too. But for the most part, these are very accurate numbers. So here's your numbers for Portillos. Then you can see these are the smaller cap companies like a Potbelly's. Potbelly's is actually a Potbelly's or a Shake Shack is actually it's a more similar business model compared to something like a Wendy's or McDonald's, because Wendy's or McDonald's, I would say it's like, the thing with Portillos is it's not as casual as a McDonald's or a Wendy's, but it's not as fancy as a Texas Roadhouse or a Olive Garden or something like that. It's not at that level. And the other thing is that you don't have somebody waiting on you at Portillos, which with some of these other restaurants you do. So you kind of got to put all these restaurants into perspective and say, okay, which ones does it have most in common with? The Chipotle, it's pretty similar to. Potbelly's, it's similar to, but Potbelly's is a much smaller company, and they're not as in a healthy position as Portillos. So it's still relevant to look at just to see, okay, Potbelly's has market cap of 170 million. They have really bad profit margins. They lose tons of money. They have an extremely high forward PE ratio. Number of locations 436, and then they average a little under $1 million per location. If we look at something like and I like to put these big established companies like a McDonald's or a Wendy's on there, because that kind of shows you that, at their peak or at maturity, what these companies will trade at. So as you can see, a Wendy's and a McDonald's trades at a 25 forward PE ratio. So that's at a mature level. And that's something I can see Portillo's trading at, years and years down the road. For a Chipotle, they are also a very established company, but I think it's a little bit overvalued. If we look at Chipotle's forward PE ratio, it's trading at a 55. That's a lot higher than any of these other ones. Shake Shack also trades at a very high PE, but the difference with them is they are a much newer company and they are growing very fast. So their numbers support that high valuation. They're expected to grow revenue 30% next year, while Chipotle is expected to grow revenue 13%. So that's a big difference there. And so the other thing I did was I compared it to Outback Steakhouse, just because Outback Steakhouse has roughly the amount of locations that Portillo's wants to have, and Outback is an established brand. So I think the other thing we notice here with these average revenue per store numbers is that as they get bigger and bigger, the average revenue is going to go down per store. So right now, Portillo's by far has the highest number, but that's because they have the smallest number of locations. They only have 67 locations. And they did say that they are starting to expand in opening up stores in Arizona and Florida, but they said their operations are most efficient and most profitable in the Chicagoland Midwest area. And that's why their average revenue is $8 million per store. But as you can see for these other ones, it comes down to, $3 million, $4 million per store. So you got to factor that in. And so that's why Outback averages $1.5 million a year per store. Portillo's, we're going to use an estimate of 4 million. That's right in the middle between these. Okay, we can say 4 million because Texas Roadhouse is doing 6 million per location, and they have 540 locations. So that's kind of similar to Portillo's as well. Do I think Portillo's is going to be able to sustain a $6 million revenue per store number? No, not at all. But I think it can easily be higher than a $2 million number like a Chipotle. So we're going to say right around 4 million. Then if they have, and then if they have 600 locations, that will be $2.4 billion worth of revenue per year. And this is at their mature levels. This is, 20 years down the road. And then profit margins, if we see here, we can say, okay, some of these companies are unprofitable, like Potbelly's and Shake Shack. And then the other ones are normally right around, McDonald's is very high, but that's just because of their franchising fees and stuff. So, but these other ones like Chipotle's at a 10%, Texas Roadhouse 6%, Cracker Barrel 9%. So let's say we use and Portillo's right now is at a 5.4% profit margin. So let's say down the road they can improve some things, and let's say it's around 7%. That will be right around $168 million of net income. Okay. And, it could be a little bit under, maybe it's 150 million, maybe it's 180 million, something like that. But if this company is trading at a mature level, let's say a forward PE of 25, because that's where Wendy's and McDonald's trades at, then Portillo's will be valued at $4.2 billion. And they're expected to hit these numbers in 20 years from now. They said 600 locations in around 20 years from now. So this means my price target for this company is $65, but 20 years from now. So, and it's trading at a $40 valuation, a $40 price right now. So you can see that this is not a good deal at all, because you're not maybe for right now, I would buy this company at probably if it's going to be a $2.4 billion company 20 years from now, this company is worth like maybe 500 million, maybe something like that. I don't see it being worth much more than that right now. So, I mean, I would say right around that $20 a share. I would say under $20 a share, maybe consider buying it, maybe $15 a share. But at these levels, it's way too expensive. Then if we go down here, we can see if we use my stock market checklist, these are all the things I look for in a stock. Normally if it hits 12 out of the 16, it's a buy. And out of these 16, it only hits 10 of them. Okay, six of them it's missing or it's weak on. The stock is not down. It does not have a low forward PE. It's not innovative. It does not have a healthy return on invested capital. It does not have a healthy current ratio. They have more short-term debt than they do short-term assets. They do not have a share buyback or a dividend program. And there are no, we don't have information of hedge funds or big insiders buying yet. So that's a no as well. And those are all the reasons why I think this one Portillos is not a buy, but I think it's a strong company. It's got a good brand. Everybody likes Portillos. It's got a good business model. The profit margins are higher than a lot of other companies. They have extremely high average revenues per store. And so maybe if the valuation if it was like a fifth of what it was at now. So, I mean, how I said, right around maybe, $10 to $15, it would be a buy, but anything around 20 or above, it's really not. Because I think at maturity, the highest I could see it being $65 at its highest, 2 decades from now. So it doesn't make sense to buy it at 40. Does it make sense to buy it at 10? Yeah, if you can, it kind of does at $10 or $12 a share. But these prices, it's not a very good deal at all. So this is not